Okay, so today we're going to be going over the largest platinum miner in the world, Anglo American Platinum. So, who are they? They're South African platinum group metal producer, founded in 1995 as a spin-off of Anglo American. They have been the largest producer of platinum, palladium, and rhodium. Currently, they have a market cap of around $33 billion US, with PE ratio for trailing 12 months is about 15.19. So, looking at their production history, this is one of the things that creates a lot of anomalies, in my opinion. That if you look at this chart, it's a very varied production history. It's not a stable trend of going up. It's not a stable trend of just kind of being even. It's kind of going in this kind of like sinusoidal curve where it's going up and down. And for me, as like an investor, that creates a lot of kind of fear and like distrust. That's like, okay, I don't actually know what this company is going to be producing. And I want to do this kind of analysis just to kind of compare it to Sibanye and to Impala and kind of see what the intrinsic value here is. So I did production kind of like, so for here I have 2021, and this is based off first quarter production. I just annualized it out, times it by 4. And we're looking at about 3.9 million 4 ounces. Maybe it's 6 ounces, I can't remember. But if we go back to 2020, this production was dramatically down as 2.7 million ounces. You could say some of this is COVID, but that's a big decrease. And so if you look at this peak, I have the peak here of 2018, and that was 5.2 million ounces. And if you compare the peak of 2018 to the trough of 2020, that's a 48% decrease in production. So it's like maybe it's this company's like producing these high amount ounces, it might make sense. But it's like if they have another rough year, it's like, I'm not so sure. And I also wonder too because they've sold off their mines. Like they sold off 3 of their mines to Sibanye-Stillwater, and I think they sold off a few other mines to different platinum companies as well. I'm not sure on that one though. So I created a revenue estimate based on their 2021 production. So that's basically like just if their first quarter production plays out. And so we look at their market cap, $33 billion market cap. Looking at like their money from all this stuff. Obviously, they're making lots from the rhodium production. Fantastic. So their revenues projected to be about $14 billion. And this is the higher projection too. Costs about $5 billion. This cost per ounce is relatively high, of about $1,300 per ounce. And that was just what they had in 2021 or 2020. So that might be lower because they didn't update that in their first quarter production. So we won't really know until they've reported their H1 earnings. So that's at like the end of the first 6 months of the year. So this is likely that this is probably pretty high, just because production was so low last year that when you're kind of doing it on a per ounce basis, it kind of inflates the cost. So this might come down to 1,100 or 1,000, but I just want to kind of be conservative and just going off the numbers from last year. So yeah, $14 billion in revenue, $5 billion in costs. So it looks like they're making about $9 billion. And this gives them a PE ratio, forward-looking PE ratio of 3.65. So in just like financial terms, this is actually really good. Like this makes a lot of sense, provides a lot of value. It's more just that in comparison to Sibanye and Impala, which is basically the exact same business model, it's just dramatically overvalued in those kind of terms. So then here I have 2020 revenue estimate based off the 2020 production. So we go through same kind of numbers, $9 billion in revenue, so significantly down. So we're looking at like a $4 billion difference in the actual earnings. It's just based off of like difference of potentials in production, which this number should be different, I think. But so what we'd have is lower cost production, so $3.5 billion cost. So we're looking at about $6.3 billion profit and a forward PE ratio of 5.6. So again, this is still pretty reasonable to be having this kind of PE ratio. but it's just looking at it compared to the other companies that they just seem so much better. So we have reserves and resources. They have 147 million ounces of 4E of reserves and 718 million ounces of resources. So if you basically take like the resources divided by the market cap, it's giving you about $81.16 for every dollar that you buy of their stock. You're getting $81 of metal in the ground. Pretty decent deal. We're looking at total reserve in the ground of 2.7 trillion dollars. So a lot of resources in the ground. So comparing the top three platinum group miners, and I also included two of the development projects as well. So Sibanye, if you basically look at earnings divided by market cap, so basically for every dollar you invest in it, how much dollar are you making back kind of in earnings and cash flow? So this isn't dividends, but this is basically like how much the company is making in profits based off of that. And so they're making 51 cents for every dollar invested in the company. Impala's cash flowing really well and really cheap, so it's at 60 cents for every. You make basically 60 cents in earnings for every dollar you invest in the company. Anglo American on the higher production numbers of just based on 2021 Q1 is basically 30 cents for every dollar invested. And then if they have their lower production numbers like 2020, you'd be making 18 cents in earnings per dollar spent on it. So all these are quite reasonable compared to some of these tech stocks like Tesla or something like that. But it's just the relative value of Impala and Sibanye just seems so significantly higher. And then we go over to resources divided by market cap. So basically, this is kind of like taking Sibanye's profits or like metal in the ground and dividing it by their market cap. Same thing for Impala and Anglo American. And so Sibanye has $123 of resources in the ground for every dollar of market cap that you're buying. So it's like you're basically, every dollar you put into this company, you're getting $123 of metal in the ground. For Impala, that number is $72 per dollar invested. So it's a bit lower compared to these other companies, but still quite significant. Anglo American is $81, $82. So it's kind of like, to me, Sibanye probably looks like the best value proposition is that it has quite high earnings to market cap ratio, and it also has significantly higher resources to market cap. So this means that they can spend more of their money just developing existing projects or paying back it into dividends, versus Impala, maybe they have to spend a bit more money to actually go back into the market and buy new development projects just to keep their resources up. So here I created a new number that I haven't really seen anywhere before, and just kind of, it's timesing this earnings divided by market cap timesing the resources divided by market cap, and kind of just seeing what the value you get for kind of like every dollar invested in the company. And it still hasn't been kind of hammered out because it very heavily skews to the resources side of things. But basically what we'd be looking at for Sibanye is that we'd be getting $62.50 of value for every dollar invested in market cap. For Impala, $43. For Anglo American, somewhere between $23 to $14. So you can just see that there's just significantly more value in Impala and Sibanye than Anglo American right now. And then I also want to compare to Generation Mining and Platinum Group Metals and just kind of show kind of generally like how I think of it is that these juniors, they don't have any cash flow. They don't have a developed mine. And so to compensate for that, they should actually have much more resources per market cap dollar invested to kind of compensate for that. And in this case, that just doesn't really show up. It's like Generation Mining actually has less resources per dollar of market cap than Sibanye, and it doesn't even have a development, like it hasn't even got a working mine yet. And Sibanye actually is a partner in Generation Mining's Marathon deposit, and they actually optioned it out to them. But to me, this says is that there's a bit too much interest in kind of like the juniors, and like these seniors who are actually producing metal, making money, are kind of being overlooked. What I'd prefer to see is like maybe it's like, okay, like I'm getting buying 2 times or 5 times as much resources per market cap for one of these juniors, and that's kind of like the compensatory effect of it. Then you see Platinum Group Metals is $158 of resources in the ground for the market cap. And that's just a lot because it's a much longer lived mine. I believe it's like 50 years, 40 years, somewhere in there. And just, yeah, a very big deposit. So summary, Anglo American Platinum is a massive producer of PGMs and will likely be extremely profitable over the next 10 years, but seems significantly overvalued compared to Sibanye-Stillwater and Impala Platinum. Production for Anglo seems extremely uncertain, which makes it tough to value, and they haven't necessarily had the best history of employee relationships. If you kind of like go back to like their history and stuff like that, I think there's been some cases where they like put on some like massive defamation lawsuits onto lawyers that are trying to fight for workers' rights. And they've also like been cases where like there was a strike, and I believe that like some of the security guards or the police or something like that shot people who were striking. So it's not necessarily like the best relationship that they've had with kind of like the employees that they have in the South African area. But I think that for the right price, this stock might be worthwhile. But just right now, it just doesn't seem like it. So something to keep on your radar. But it's like if I was going to invest, I'd definitely pick Sibanye and Impala right now over Anglo American. Yeah, that's everything. Thanks for watching.